Hi, this is Amy from iTradeAIMS, and today I'm going to talk about AIMS Entry Alert V5.1. We're going to talk about what it is, why we use it, how did we arrive at it, and what was this original purpose, and now how do we use it. So let's begin. Okay, so now I have removed the gator just to show you why we have this. So I'm gonna bring a moving average. It's going to be a 5 simple moving average. I color it yellow so it's bright on the screen. And instead of this one, we're going to have a 5 simple moving average. So this is basically a 34 simple moving average, the thick line, and the dotted line is 5 simple moving average. Now the AO is basically the cross of the 5 and 34 simple moving average. Did you guys know that? Yeah. So when it crosses below, we have a red histogram, and when it crosses above it, we have a green histogram, the beginning of it. So what is the histogram? Well, the histogram is basically the distance between the 5 simple moving average and the 34 simple moving average. So visually, this still looks like trend is going up, but basically the distance between the 5 and the 34 is actually reducing, and that's why you see this divergence happening over here. So this is the whole concept of this. Now, if you were to go for a cross of the zero line of the AO, what you're looking for is a cross of 534 moving average. So there are loads of crosses, like you can find this on TradingView as well, the moving average cross. You can assign that to say, okay, when 5 crosses the zero line, 5 crosses 34 below, it's going to be a red cross, and if 5 crosses above, it's a green cross. So that's the mechanism for that cross that you were talking about. You know, the alert that you shared, the MT4 file. It's basically this, because this is the code of AO. Now we thought, right? Did you want to say something?
No, I was just saying, yeah, that's what it is. Yeah.
That's the gist of it, right? So now think about this. By the time 5 crosses the 34, price has already told us quite a lot about it. If you can see, price has already been going there from that point. And by the time it crosses over here, we had other information that we had gathered much more in advance of this. So this is what led to creating the AIMS Entry Alert, was that we know that price would cross the 5 before the 5 crosses the 34. Make sense?
Yeah, it does. Yeah.
So we design an alert for when the price crosses the 5 MA. And then obviously later on we change it to the 5 smooth moving average, because that was the gator line. So we changed it to price crossing the gator line. So let me bring that back now, the normal template. You can see here that we have a black dot here. So before the black dot was introduced, black dot means basically prices closed against the purple. So this is not a signal for us. It's a signal that's basically a termination signal. So if you're long on a black dot or a diamond dot, which is set up over here, I've used 0 for it, so it comes across. Otherwise, you can have like any other symbol for it, whatever you like. So I don't know which one should I use. 141, wingding, whatever it is. So this would be your black dot based on this. Now, if you don't have a black dot, there will be an alert telling you that price is closed below the green line, which means price is now closed inside the gator. And that actually would indicate that if this has happened and it continues, then AO will cross the zero line in the near future. So you get alerted quite in advance. And then later on, going through it, we actually drop the idea of looking for cross of zero line. Instead, we thought, okay, alert me when price is going back in that direction above the green line. So over here, which was quite a few hours in advance, we were alerted that there's a possibility that there will be a setup one on the euro dollar hourly chart. So look out for this. So when this happened and you got alerted, you actually started monitoring this chart until you got the tight box and you put a pending order there. So if I go back to the gold chart, so the gold chart, you had your first cross of zero line over here. If you were alerted by the black dot, then you would be alerted a few hours before that, and then that alert will be cancelled, and then you would be alerted again to wait for a wave 4. And then before that happens, you were then alerted again by this red dot telling you that there's a possibility it might break out, which it did but failed. Then it went up, and then you have the pink dot, and MH was asking about the pink dot, what's the concept behind it. Obviously, hopefully he knows that. And the concept is that this has basically broken the box low. And when the box low is broken, we cannot take entries. And the concept behind that is that we don't want to take market orders. And the concept behind that is that when we were trading the euro dollar on the M1, or even now when we're trading the 1 minute chart or the faster time frame, personally, for me, after the analysis, when you keep a journal and do all those things and you record yourself and you find out there's a bunch of mistakes that are identical. So it created a pattern. I found out that most of the time when I went market order is when I actually broke rules. So most of the time when I was chasing price and I was losing discipline, I was actually doing market orders. So to remedy that, I banned myself from taking market orders. So that meant that the ideal way of trading was to set pending orders. So if there was a pink dot, it already told me, listen, it has broken a box. And because your rule of only trading on a pending order or a stop order, like they say, limit or stop order, I had to then wait for a new box. So pink dot means wait for a new fresh box, which is here. So before this red dot was created, or this red one, you already had an order set up before you went to bed if you were in UK. If not, then when you looked at the chart on Friday around here, or when you saw this box created at the end of this candle, you'd have the box created, setup one was ready for us, you would take this trade, like so. And then if you were to get rid of the entry alert, which almost I think a lot of us do now, that we just look for the pattern like this, we wait for the 3 and the 4, and then we kind of make our decision when to get in based on the levels to the left and all that. If you do that, then all of a sudden you would start thinking about, what if I have an alert of the cross of zero line so that I can only look at those charts. Now that is valid and true, and I know it makes sense, but if you start to follow this will then eventually lead to that same thought process. Oh, what if I knew it? What if I got alerted even before the cross of the zero line? But I think on the hourly chart, it would still make sense to get alerted. So let's suppose you got alerted over here. Is this a setup? Still not. So my answer for that, for the hourly chart, is the process should be actually even different than that. Why? Because we only have a bunch of charts to look at. So let's suppose what you see on the chart, this is my setup for the hourly charts. I would look at euro dollar, the pound dollar, USD CAD. It's hit target point, by the way. The entry was here, left it over the weekend, and it hit it. This is not the account, but I think That's what it is. So it hit it here. Now, hold on, let me just bring the setup 1 for this. So if you look at this one, instead of getting alerted over here and then waiting for it, you could have actually waited for this alert. But the process that I'm now going to give you is even better than that. You don't even need to wait for this at that time. You just come here at Frankfurt Open, this candle, just before this candle. And you have 10 charts to look at. So Control Tab is what takes you to the next chart like this. This is very fast for me. I have a mouse which has extra buttons. So I have Control Tab and Control Shift Tab, which then, you know, scrolls it back from one tab to the other. I've actually coded them. So I can go very quickly back, you know, backward and forward. But it will only do it in the right order if you click this button. Can you see this button? Arrange windows as non-overlapping tiles, or Alt-R. Once it does that, and then you select the first chart from here, and then you do Control-Tab, it would go right in that fashion. It will scroll through. So let's suppose I'm here in the morning. This is 5 minutes before the Frankfurt Open, and I started looking at the charts. Watch my process now. I'm looking at it. 1, oops, 2, 3, 4, probably something. No, not ready. Hold on. Box is big. No, nothing. Around here I'd be very interested because I have this, right? When I saw this, I would have gone short. Here you go, that, and that, and that, and that. Literally takes a minute. So if the chart was over here, I'd be very interested in it. So basically, what I'm saying is that for an hourly time frame, you have permanently shortlisted your 8 or 10 markets. So there is no need for ideally be alerted about a cross of zero line or something like that. Because if you are alerted about a cross of zero line, there might still be quite a few hours before you actually need to put that. But I think on a daily chart, when you're trading stocks and you can choose from thousands of stocks, then that serves as a very good alert. So the scanner that we have for stocks, when something like this happens, you know, a wave 3 down, suppose this is the daily chart, and then there's a cross of zero line over here. At this point, or at this day, at the end of this day, this chart would have entered my watch list. And during the next few days, I would have watched it until it broke over here or here. Then, or around this point, I would have started putting my pending orders, if this was a daily chart. And then obviously this would have been taken and this would have been an add-on, and I would still be short in this, or probably got out of that. So the whole concept of the entry alert basically started from this cross of the zero line. Now let me just actually look at some of the features. Back in the days, we used to have the voice alert, and Sarah was 3 years old. I had recorded some alerts in her voice, and we used some other people's voices as well, and we used some computer voices as well. So when this was on, and there's a set of voice files attached to it, every time there's a red dot, I used to call out red dot on so-and-so pair and so-and-so time frame. Well, that has, you know, it had its own days, and we enjoyed it. Now we don't use that. The pop-up alert is your normal pop-up alert, you know, the one that comes up. It tells you what color dot it is and what's the direction of it. For higher time frame people who run this on VPS, they can have email alert set up as well. So the email settings are somewhere in tools and all that, right over here. Email setup. So when you want to set up email, you click on that, and then you have your SMTP server and login and password and all that. So you can actually do your Google account connected to this as well and stuff like that. So what else was there? Let me go back to it. So that's your email alert. This is our filter purple. So obviously when we were having the dots being printed, we were not interested in all different colors of dots. So if I were to go and switch off the purple filter, then what would it do is that it would print us colored dots on either direction. So what it's doing is that when a candle closes above the green line and purple is above it, we're not interested in this in terms of an entry signal. It is an exit signal or a cancellation signal, but not an entry signal. So when it filters, it colors it black. So that's what it does. And this is that option for show black dots. So if I say I don't even want to see any of the black dots with this on, and then I go with this option, then I would only see the dots that actually when price closes, in this case when price closes below the green line and it's going away from purple, then it would only print red and pink dots. And when price is going up, it would only print the dots when price closes above the green line and the green line itself and the gator itself is above the purple. Then it would do that. It makes the chart cleaner and your job is very objective. When we first started this, and Grant did this for quite a while, we mechanically traded the dots. So the flow chart was something like this. Wherever you had a dot, then you went through. So we basically looked at every dot that appeared on the 1 minute chart and we processed that information. So not a single dot was ignored. Every dot was considered, and obviously the dot then is followed by the flow chart rules. So a dot is only alert, and then after that you look at it. So all of these dots will be a 1 second job, because your purple is mingle, purple is mingle, purple is mingle, purple is mingle, cancel, cancel, cancel over here. But then when you got it here, it gave you a setup 2, because the moment you see the dot and then you ask the next question, is gator closed? The answer is no, it's open. So obviously it's a setup 2. Then the next question is the box correct? Blah, blah, blah. Block size is okay. AO is red. Target zone 1, blah, blah, blah. It's there and you take a trade. Over here, when you have a red dot, AO is close to 0 line. Then you have the box tight. You probably had a pending order short here. The price went up. And as soon as this happens, when it crosses up there, you cancel it. But what we used to do is that we would have the black dot being shown. So at this point, we would set a pending order, but when we have a black dot, which means price closed above there, we'll cancel the order. And we also took trades based on these kind of dots. So we would have a blue dot, but at this time, the reason it's not colored black is because we have a filter in there that if the purple is inside the box, then we might still be interested in it. So don't color it black. Instead, give us a color, because what we want to do is we want to wait if price then does go above the purple. In this case, it did go above the purple and it created a setup. So technically, based on those rules, you could still have taken this long, but obviously this would not be a setup 1, because the 2017 rules are that a setup 1 must have a wave 3 to the left of it, and this one does not have a wave 3 to it. Whereas this one would be considered a setup 1, because if you look to the left, you have a wave 3. Over here, you have a blue dot, but the gator is open, so it's not a setup 1, but it is a setup 2, or it was a setup 2, but I think the box was too big. Even then, if you took it, you probably had a small rent or a break even. And then this is another setup that we see. So setups like these are the ones that we love. I mean, this wave 3 is way too strong. It's a bit tricky, but technically over here it wasn't a setup because the box was too big. Over here it became a setup because box was all right, but AO was just close to 0 line, not a fresh cross. If you waited a bit longer, then next day at Frankfurt Open, you had a very tight box. A level wouldn't be here, it would be here. So you'd have a sleeping gator. So you look for red dot. Red dot will alert you. You look at the chart, you'll ask the questions. Gator sleeping, yes. Purple correct, yes. Box tight, yes. Exit or levels to the left far enough, yes. Is exit close enough? Is take profit, feasible, which means double of the exit? You would take this, and most probably you took either a 1 hour or a break-even trade on this, because if you went short here, you probably turn your stop loss to break even, especially when you have a very strong move like this. When price comes back to the level to the left, you want to move your stop loss to break even. So I thought I'll take the opportunity today to actually talk about AIMS Entry Alert V5.1, why it's there and why it was originate, what was the history behind it. So basically it started from a 534 crossover, then changed into a 134 crossover, and then changed into a price close above and below green line. And then we added a few more features of the purple filter and the box break filter, and the filter based on the size of the box was added to it as well, as you can see.
Just like
filter,
the dial's moving, because last time you asked me to let you know.
Yeah?
Yeah. Big. It's just popped big time.
Right.
Not big time, but it's just moved.
All right. Let me have a look. I'll have a look at the same chart.
I just nailed 2R on that. Beautiful 2R in seconds.
Well, the M1 itself had a nice setup over here. It had earlier to the upside, and this is that reversal type of setup that you were talking about. So this usually happens after when you have a very strong move like so, and then price starts to reverse on the M5. Then on the M1 you would see the gator crossing the purple like so. I have my DAX charts closed. I'm not trading DAX anymore for the day. Thank you for alerting me. I think there would be something here, but I think it's kind of moved here. If you caught this, then you caught this. Not a setup one per se. Inside this would be a lovely pullback on the 12-second chart. Let me see if I can find that. This is too big for me. This drop is too big. If it was somewhere here and then it pulled back this much, I would have taken it. But anyway, my DAX thing is closed. 1 or 2 hours is max for me. Anyway, does anyone have any question?
Yeah, so when you're doing these S1 trades on the hourlies, are you only looking for them around the Frankfurt Open? Or would you take them on day?
So the process for that is to have 10 charts displayed.
Yeah.
And I will click this button. I'll make sure everything is on hourly. I'll just get rid of this. So I have these charts. I would select the first one, and I would start looking at what's happening over here, right? So let's suppose I was watching this on Friday. I would have known that price is out of the box, and I would have thought, okay, this is a nice setup one. I could probably do a limit order here. If I did a limit order and then have my stop loss would be here. Otherwise, if I waited, then I had to take it over here, which obviously I haven't taken because I only take the trades around that time. It's not that I only take it, but most of the time I would set my orders around Frankfurt Open, then after the London Open, then 1 or 2 hours. You know, the times that we are watching the charts. So up to, I think, over here, I'd be. And then if I come back in the US session and something is setting up, I would take that trade as well. So if I looked at it, let's say this would be 1 o'clock, I should have taken it, but most probably because of the Friday or weekend, I didn't take it. But now we see that actually it is there. And plus, the other thing was that I was already short on the dollar CAD. So I thought, okay, I'll just let that one go. So then I would move to the next chart and see if there's a 3 and a 4. I'll just look for a setup 1. So around here, this wasn't a setup 1. So this wouldn't have triggered anything for me. This had no fresh cross. So I'm talking about Friday, right?
Yeah.
So this was not a setup 1 for me, very clearly, because I don't have a 3 and a 4. And so this one I took. Same scenario like the Euro USD. As you can see, when at Frankfurt Open I was looking at it, it had already broken. So I took an entry somewhere here. It was somewhere around here. Stop loss was up there, so 25, and which made target point as 50, and it's got hit now. So I had to let it run over the weekend, and it hit it. So why is it a setup 1 for me? Because of this. So I'm just looking at this. When I'm looking at price, I look at 3 and 4. So when I see 3 and 4, then I go into the minute details of it. Okay, where's the gator, where's the box, and then I would sometime pull that target zone 1. If you have the E-Wave from Snom's website, the full version, then you'd have the option to have target zone 1 printed for you automatic as well. So it's recommended that if you want, you can buy that. So that's your target zone 1 hit over here. And then, okay, so Australian dollar. I think Australian dollar was also a setup here, but it was a tricky one, so I haven't taken it. New Zealand dollar was a good setup here. Box was slightly big. For that reason, it was filtered. I remember this very well. And now, I could have done is that I would have taken a trade here and have my stop loss here, 22. In both cases, I think if I took it and then I held it through this, which I probably wouldn't, because Gator is sleeping, I would have gotten out of it. But then again, it's set up again, so it could have been taken again here. If I took it here, then most probably I'm still in it. So that's another one. Bitcoin had quite a lot of setups on the hourly recently. So paid a rent here, took a trade here. A nice setup too. Let me bring the setup 1 template. See this, the blue dot becomes a setup 2 dot. So why is this a setup 2? It's because when you see a blue dot and the gator is open and purple is correct and box is tight, this is our setup 2. And as you know, there's nothing left, nothing to the left. This makes setup 2 even higher probability than the setup 1. Well, anyway, a setup 2 on a certain time frame is a setup 1 on the lower time frame. I think in most probably this will be a setup 1 on the 15-minute chart. 17 November. Let's go if we have the data. So if you ever come across this situation when the dots are all scattered, just change the time frame back and forth, and it, figured itself. This happens when it calls for new data. So as you can see, this is that line. On the hourly, we have a setup 2 dot. On the 15-minute chart, it's a setup 1 because you have a 3 and a 4. That is because the green line of the gator is literally the AO of the 5 times lower time frame. So when price closes below this, and this is what I actually wanted to mention earlier as well, was that when we first originally, I actually forgot mentioning it, when we first started our entry alert first one, it was based on the cross of the zero line of this one. And then I thought, what if we have a cross of the zero line of the 3 times lower time frame? So because that would be faster. So we came up with another AO, which was the faster AO. It was the cross of the
higher time frame.
Yes, it was an AO of a lower time frame plotted onto this, and then we added that signal into it. So that kind of evolved into this, and now we know that basically every time price closes below the green line, you would have a cross of the zero line of the AO. So let me mark this for you, and let's drop to. So this is cross below the green, this line, and this is now cross above the green. And let's look at the M15 chart. You would see here that when we had the black dot on the hourly, we had a cross of the zero line here on the AO, and then we have the cross of the zero line above the green line over here. So that's what that's why our love or our understanding or belief about the entry alert is strong. Like for me personally, because I know this is what it is. Every time it does that, so it's not just simply a cross of two moving averages or something. It is basically fractal geometry, because we love this crosses of the zero line of AO, because we know this kind of shows us the wave of the market. So basically when you see a dot here and a dot here, this is telling you that the M15 chart AO has now dipped below the zero line and now is going above the zero line again. And then if you look at it further, you would find out that whenever you have at least 2 or 3 dark bars here, when on the current time frame your AO turns into dark, 2 or 3 bars, let me put that on the third bar here, this would indicate, so this is even faster than the cross of the green line, this would indicate that the AO of the lower time frame has crossed the zero line. So let me now drop to the M15. You can see here that mechanism that you're looking for, the cross of the zero line, Doug, this is inbuilt into your system if you understand AO. That's why we keep saying that if you understood the E wave, you would understand Elliott wave far better than the Elliottians, and you would understand the structure of the market far better than anyone else, because it looks very simple, but it's got so much information into it. So you see, the cross of zero line was important for us. Yes, it's a great idea, but then what is the dark bars? Well, the dark bars actually indicate the cross of the zero line of the 3 times lower time frame or the 5 times lower time frame. So there you go. When you have a cross of the zero line, and that's why we have the hunt signals, because the hunt signal is a pullback, but at the same time, it's a setup 1 of the lower time frame. So there we go. This is a really beautiful setup. This system is really, explained, and like they've got different multi-levels of it. Fractal geometry of it is amazing. I love it myself. I hope you love it too.
Yep.
So there you go. Now the dot is basically the cross of the zero line. Was I able to explain that to you correctly? Why I'm saying entry alert is actually faster?
Yeah, it makes sense. Yeah,
yeah, because
I didn't realise you could. Yeah, I knew what it was, but yeah, I suppose use that.
You see, before you could have before the AO crosses the zero line on your current time frame, it's going to cross it on a lower time frame.
Yeah.
And you can see that by looking at 2 things, the dark bars, and then eventually the close of price below the green line. This is just final confirmation. So around the 3rd bar here, you had the first idea that the AO of the lower time frame is probably turning zero line, below the zero line. And then at this level, it was confirmed that now it must be. But obviously you can just drop to it and find it yourself. And then when that happens, you have a setup 1 here, and price continues. So this way, if you take setup 1 and setup 2, you will automatically be taking the setup 1s of the current time frame and the 5 times lower time frame. And in most cases, your setup 1 of your current time frame will be a setup 2 of the higher time frame, or a hunt signal. Mm-hmm. So this is all kind of connected. So when Bitcoin dropped to 17,000, actually it was an opportunity to buy. Looks like it. And people have bought it. So people who sold it here got B-trapped, and it went up, further up. There you go. Is DAX still continuing?
No. That drop, and then it's kind of doing a bit of a setup 1, but not really. It's
so
going the other way now.
Euro dollar is going into a massive wave 5. If we look at the weekly chart, we see a 1, 2, 3, 4. So maybe, so there's a possibility it might, touch those levels. And even break through it. So if you look at the daily chart, we have a 3 and a 4, and within a 4 we have a P5 setup. So for those of you who don't know the P5 setup, it's basically when the wave 4, the corrective wave 4, creates a 3, 4, 5 pattern on the E wave. As you can see here, 3, 4, 5. This is a 3, 4, 5, but it's a corrective 3, 4, 5 because it's a wave 4. So we call this P5, principle 5. The principle of the 5-wave correction. So 3, 4, 5. This is ABC, but you know, it appears like 3, 4, 5 on this. That's the principle 5. And then after that, usually you would see a wave 5 up, and it's already started. So it's underway, and it's going to touch the peak of 3 here, and we'd see if it clears this level. We are talking about then price testing 1.2092, or let's say 1.21, and then after that probably 1.216 or 1.22 is then possible. So we'll see what happens around this level. Since we are here, we'll quickly do the analysis as well. The pound dollar is in an uptrend. This is also doing a wave 5, similar to the euro dollar. So when the daily chart is in an uptrend, anything on the 4-hour chart, every time there's a pullback, you'll have a setup 1. So there you go. That's that. So any setup that happens on the hourly chart, this is another way of trading this. If you were trading the reversal setup, the fruit methodology, then every time, then the best way is to basically find a trending market and then go to the hourly chart, and when price goes against the trend and it creates the fruit setup, take those. So like for example here, that was the fruit, goes up, but this is not the perfect fruit, is it? There will be other examples. Okay, next one, Swizzy. Swizzy is now in a downtrend, but there are still levels to the left for it. So consecutive candles going on. This was a setup 1, but the box was too big at the time. But even then it could have been taken, because if you can take it here, you can have your stop loss just 15 or 20 points up there, you know, above this level. And we can see that it retested this level, but the only thing that stopped me from taking this is, 1, I was already short on dollar CAD, and the second, you know, Friday. Dollar yen does not have a good setup because we have a 3-3 situation. We see a very strong move up and a move down. So if you look at the daily chart, it's really not moving strongly. So but there's a thing about dollar yen. This is what I call the most elastic pair. So when it loses volatility, it will go into really, really tight ranges. So look at that. This range is just 13 pips. So this entire day was actually 25 pips. But it's the most elastic one as well, because when the volatility hits it, this moves a lot. So this is the beauty of this pair. Like, look at this. And we have a 25 and 30 pip ranges, and then it starts to move suddenly. And this day, from this point onwards, let's say the London Open, it's moved 220 pips. And this is the personality characteristic of dollar yen. So the personality characteristic of euro dollar is that it is a very this one is, it's kind of, it's not spiky, but it kind of like creates those tails every now and then. But when it begins to move, it moves very steady fashion. It has quite a lot of pips in it and quite a lot of money into it, so nobody can actually make it spike that easily, if you know what I mean. So it has that consistency in it. Whereas when you come to the pound is very volatile. It's very spiky as well at times, and when it goes into a very strong kind of momentum days, then nothing is able to stop it. It just keeps going and going and going. But when it goes spiky, it has the ability to actually move as spiky and you know, in both direction in same day, and that's what makes it very different to the other ones. Swizzy is more like a combination of dollar yen and euro dollar, so it can go elastic at times. The pound yen then, because it's and the reason we call it the dragon is because it's a cross between the pound dollar and the dollar yen. So it has the spikiness and the brutality of the pound, you know, and at the same time, it's sometimes, because dollar yen is not always very volatile, so when the pound volatility kicks in, and at the same time the dollar yen volatility kicks in, then this thing really moves 300, 400, 500 pips in a day. So as you can see over here, it's moved 280 pips, and then it's followed by it again. But then when the dollar yen goes into its normal kind of, you know, the dead phase, then pound yen will lose its volatility as well. So then you have the euro yen, which I used to call the Japanese princess. It's because it's a mixture of euro dollar and the dollar yen. So you have the smoothness of euro dollar mixed with the dollar yen. So when the dollar yen goes volatile, euro dollar would bring its smoothness into it, and it creates some really lovely smooth moves from time to time, and that's why it's on the list. And obviously dollar CAD is it's the loonie. You cannot have your portfolio completed without this oil-based pair. So if you don't have oil, you just trade dollar CAD, and you're basically trading oil because it's very correlated. And now, in the next one, we have the Australian dollar. This is literally like trading the gold chart because the economy is really connected to it. But having said that, you can't really say that it's 100% because look at it. You know, it's not always the case. Let me bring Australian dollar on the daily chart. So Australian dollar on the daily chart is going into a wave 5, but if you look at the gold chart, it's actually going down. So it's going against each other. So yeah, Australian dollar and New Zealand dollar are the commodity pairs. This then completes your entire portfolio. If you have, you can do without euro yen, or you can remove or add euro pound to it, to the mix. And there's really no need for Bitcoin, but because everybody loves Bitcoin, it's famous and all that, so we keep it here. You would get those. And then obviously we have the gold chart. The beauty of gold is that the gold personality is that it would go spiky, really bad rubbish charts, and it will go sideways, but then it pops, and that's the volatility of gold. It kind of pops like this. I call it the 10-point chart. So you know, when it moves, gold, when it moves, it kind of moves $10-15 when it moves. Obviously these days it's been a bit, you know, very highly volatile. If you look at it, 1800, and it dropped to 17, yeah, so it's dropped 23-24 points here. But if I ever trade it, in most cases I have a $5 or a $7 stop, and then it goes 10 to 15 in that direction. So if I have a 5 stop, then my target will be 10. In this case, if I was to go short here, was probably a $7 stop was the best one, and then 14 would be your target, but it went far more than that. So there we go. That's the end of it. Anything else?
That's great, mate. Thanks very much.
All right then. Have a lovely day.
Thank you. Cheers.
Bye everyone.
Thank you very much.
You're welcome.